So you guys let me know. We can do the presentation early and have more time for Q&A, or get you guys home earlier, whatever works for y'all. I've got 3 sections of Q&A so that we can kind of like go through, ask immediate questions, and then jump into the next, and we'll have one giant Q&A. And I've got some bonus slides should we need them. So just by a quick show of hands, who feels like they've got a good command of like blockchain? Okay. How about service professionals in the space, lawyers, accountants, people like that? Tech people, people that do mining, things along those lines? Okay, cool. So we won't spend too much time then on the blockchain basics, since you guys are all pretty much up to speed. We can jump kind of right more into the taxation portion of it, and then we can talk a little bit more too about the state of the market as well. So I am Andrew Kernosky. I'm the owner of Archer Tax Group. We've been in business for quite a few years. I think we're coming up on 3. I've been in taxes for about 6 in different capacities. We specialize in crypto-specific tax planning considerations. A lot of what we do is help people organize their portfolios, make the best tax choices to avoid the most tax legally. We don't do anything that would not be considered above board. And we do a lot of helping people just understand, since there's not a lot of answers that are concrete in the space. We've got one notice that we work off of from the IRS, and everything else is kind of interpreting the laws and trying to figure out what the courts are going to decide as we go along and things develop in the space. We've been in business since, like I said, 2015. It's my wife and I, so we're a small shop. We focus more on the quality instead of just trying to get out there and do what some of these larger shops are doing of, we want to prep crypto tax returns, and all they do is they prep. They don't actually give any advice. We're focused more on the advising side of things. Like I said, almost half a decade in taxes, at least 2 years in crypto. I actually had a client that got me interested in cryptocurrency. I used to work with truck drivers, and there's a lot of fun, nuanced bits within the tax code that apply specifically to truck drivers that really translated well into learning to read and interpret laws for cryptocurrency. The guy that got me into it was actually a silver trader, and he turned me to a Reddit post one day and realized that there was literally no answers and no one had any idea. And it says it's properties that qualify for like kind exchange. Do we have wash sale rules? All these different issues that no one had any answers on, and we just really jumped into that right away. And I've worked for a couple tax resolution companies of, if you owe $10,000 or more, give us a call, so we know how to get clients out of trouble and usually keep them out of trouble in the first place. And then we've done some consulting, and then obviously we do tax preparation. Personally, we invest. We have loaned on a couple different platforms with cryptocurrency. We do consulting on ICOs, and then we also work with crypto projects that are already established without an ICO as well. So we're very much in the space. We're not just saying, well, here's the tax law. We ourselves are doing things, and I never advise anyone to do anything that I wouldn't do myself or that I'm not currently doing myself as well. So the blockchain, since you guys already know, like I said, we'll keep this relatively short. The one beautiful thing about the blockchain is it is immutable. No one person can come in and start moving things around, changing information. It's a very open and public ledger, which makes it very easy to transfer data and has really democratized data. There's a lot of really great projects out there currently in regards to how information is going to change and how people are going to interact with their information differently. I see a lot of really great things coming in the space. It's decentralized or distributed. No one person has control over it. Usually you've got a group of miners that are processing the transactions and allowing the free flow of the information. And like I said, it's a giant ledger. So as an accountant, we do love ledgers. And the transactions are processed in blocks, and they're verified and confirmed by the network, either through miners or nodes. There's a bunch of different projects that are looking at how do we speed up transaction times to then drop costs so that we can process more information. There's a little bit of a scalability problem with a lot of the larger projects, but I see a lot of good things coming down the pipeline that will hopefully alleviate that. Any questions on blockchain? Like I said, it seems like you guys are pretty well versed in what blockchain is. Basic levels, nothing? Okay. So with the regulatory framework so far, like I said, there is one notice right now from the IRS that explicitly deals with what they call virtual currencies, and that's 2014-21. That is the sole document as far as how do we handle payments coming from businesses to contractors. How do you handle employment taxes? How do we look at this from a classification standpoint? There have been some rulings that we have to do a little bit of interpreting on. There's other notices as far as whether or not like-kind exchange applies, and we have to use things like gold or securities depending on the situation and the specifics within the tax implication question at the time, because you've got some projects where they start out as a utility token, but they immediately end up as a security 2 weeks later just because of how it's rolled out. Like I said, it's currently treated as property. There's a lot of questions that come with that. Property is a very wide-reaching designation. In some cases, it can be treated as a security, and we will jump into some ICO concerns and considerations as well once we get a little bit further in the presentation. Just because if you call it one thing but treat it differently as a tax issue, now all of a sudden you've got multiple jurisdictions that are going to start vying for, well, which one is it? You say it's taxed as a piece of property, but you haven't collected sales tax. You haven't done anything along those lines. And that can sometimes blow up security-based issues and get the SEC involved very quickly. Right now, the two major groups that are vying for jurisdictional control are the SEC and the CFTC. That's really based on the way that crypto is rolled out in the most recent couple of years with the ICOs as a fundraising mechanism with the SEC, and then with the CFTC looking at the futures and things like that and trying to bring more institutional money into cryptocurrencies, kind of open the door for them in some pretty big ways. Right now, the SEC has tried to take a position of taking a step back and trying to encourage good projects that are growing and go after the bad actors. One that really sticks out is the Diamond Reserve Club. It was one where they were trying to fundraise money to buy diamonds to back the cryptocurrency, and then it turns out that they never actually purchased any diamonds, and so now they're dealing with some SEC lawsuits. So knowing that it's considered property, normally any kind of cryptocurrency transaction that you're going to have is going to have a capital gains component to it. Depending on whether or not you receive it in a specific way, determines what the basis is going to be. So if I get paid in cryptocurrency for my services, I have to first record that as income to myself, subtract out my expenses, and that will give me the basis. And then when I turn around and liquidate that back to fiat, there's potentially a capital gains or a capital loss that will be worked in as well that can impact me on my personal return. Like I said, if it's earned income and you've got ordinary income, you've now got the self-employment taxes if you're a sole proprietor, or depending on the corporate structure that you use to receive that, you'll have additional income tax and then potentially payroll taxes if you're paying your employees. I added in, like I told a couple people, if it looks good, it wasn't me, it was my wife that did it. Otherwise, I'm just here to talk the specific taxes. So with this, the big three right now are Bitcoin, Litecoin, and Ethereum. There's a lot of projects that are built off of Ethereum, and so I wanted to use Ethereum as our example when we walk through a capital gains transaction. So Eddie buys some Ethereum for $100 per unit. He buys one Ethereum, and his processing cost is $1. Usually you've got some sort of exchange fee worked in. One of the really big benefits to taking cryptocurrency as a business is the processing costs are actually significantly cheaper than going through a credit card processor, whereas you'd pay 3.9% on top of a 39-cent charge for something like a PayPal or similar service. Cryptocurrency can be, I think, 0.035% or less, depending on which exchanges you're using to turn back into fiat. So by buying that Ethereum and adding in his dollar processing cost, Eddie's got a basis of $101. 11 months later, so keeping him within the short-term capital gains, he's going to sell his Ethereum for $200 with a processing cost of $2. So knowing that, does anyone want to take a guess at to what Eddie's actual gain is on his Ethereum? $97, right on. So knowing that he's got a $97 gain, when you have short-term capital gains, it's at your effective tax rate. Eddie's rate is 15%, and so his short-term capital gain will be 15% as well, or $14.55. If you wait another month in that 15% tax bracket, at long-term capital gains, you actually owe $0 of capital gains tax. So there's a big benefit sometimes in looking at your portfolio, checking your accounting period, and seeing if there's any way to push your gains into long-term capital gains, because it is a much better tax advantage rate than just doing a lot of what day traders do, or people that get excited and cash out right before their sweet spot. So So to hit long-term capital gains, it's 1 year and 1 day. So if Eddie were to earn that Ethereum versus purchasing it, so let's say he designs a website for $2,000. His actual cost between, let's say, a home office, cell phone bill, driving to go see a client, ends up being about $1,900. He's going to record a profit of $100 on his Schedule C. And on that $100, he's going to owe self-employment tax of 15.3%, and then whatever his effective income tax rate is. And I just put him at 10%, which is the lowest. And so he's going to end up owing taxes on that of $25.30. If he decides to sell that crypto later, his basis in it is the $2,000 that he recognized at fair market value, regardless of what the actual income was. So he'll recognize a capital gain of about $500 after processing costs, things like that. And then he'll pay capital gains tax on just that $500, not on the full $2,500 minus $100 of leftover profit. So there's a real strategy in here of looking at if you've got a business that can, one, save money on the processing costs, and you're in a bear or a bull market, there's a potential to actually increase your earnings. Not to mention the fact that if you're actively trading in a market, his basis in his tokens are a lot higher because he recognizes them at fair market value, and he's got the expenses to offset them and create less taxable income overall. And that's something that we look at a lot too with miners. Because the notice actually says that anything that you earn with cryptocurrency is treated as self-employment income, there's a lot of different deductions that we can take. That if someone is a very active day trader and they've got the ability to do mining as well, and they can make it as close to break even as possible, they can actually trade and have less capital gains overall in the short term by engaging in actual activity, not just buying and selling. With payroll, you treat it as if you're giving your employees fiat dollars as far as the recognizing your taxable base. Same thing with any receiving the cryptocurrency as payment. They're still going to owe income tax on it. You're going to have payroll tax as well. You'll have both the employer's half and the employee's half that has to be withheld. And then when they turn around and sell that cryptocurrency, then their basis will be whatever the fair market value that they recognize on the income, not necessarily the income post-tax. So there's a lot of companies that have started paying out in their own tokens, and there's a whole host of issues dealing with restricted stock units, restricted stock or options as well, that I think a lot of companies, especially in the ICO space, have been paying out in their own tokens, but they might not have any actual value to the tokens yet. And so there's different elections that you can make when you're working on those projects that would allow you to start the clock on those long-term capital gains before having to pay out in a significant amount later on. It can be a very expensive mistake to make. Any questions on anything there? Anything you guys want me to go over? I know I talk kind of fast as far as that income goes. Yeah.
As far as IRS is concerned, our income, income, property, and security, are those
So in some cases, yes. When you start looking at securities, there's a whole different set of rules, like the wash sale rule, that only applies to securities. So if you were to purchase let's say a unit of Ethereum, sell it, and then buy another unit of Ethereum within 30 days, they can potentially negate the buy-sell and take a look at what the tax implications would be throughout that. Right now, I would say that they're looking at it solely as property and not considering it as a security. The security is more of a concern when we start looking at SEC involvement, because if you're not going to treat it as a security on the taxation side, you can't make the argument, or if you're doing things and you're not treating it as if it were actual property, but you're treating it as a security, as a fundraising mechanism, that gives the SEC a potential case to come after you for a whole host of investor fraud or being a bad actor in the security space.
So the diamond reserve thing, if they would have actually bought diamonds, would it be a security then, or would it?
It probably would be, because there was a promise of return on investment in a way, and you're basically using one thing to fundraise as a fundraising mechanism for another. That's a really good question for an SEC attorney.
But you said then they started.
Right. They're bringing that example up specifically is they're really only looking at those that are clearly being bad actors in the space. There was a lot of concern about Ethereum being considered a security because of how they went about issuing the initial tokens, who had control, they were using it to fundraise to basically build a project. That's where we start to see a lot of concerns with the SEC starting to crack down. They want to encourage these projects that are actually doing things. Your Augur's a great example of where they've got an actual workable product that the token makes a use case. It's not just hey, I'm going to be creating a restaurant and fried cheese. Exactly. And that'll be a very interesting thing to see as court cases do come out in the next year to 3 of how the SEC is actually going to create a framework for people to work within. And a lot of states are trying to jump forward before the SEC in order to give companies at least a pat on the shoulder and say, we want you to come to the state, because it usually means a lot of high-tech jobs. But give them at least something to operate under. I think a lot of concerns with new projects are we don't know what we're going to go after, so if we try to plan for everything, we can plan for nothing. And so even if it's a bad framework, at least gives us something to work around. And I think that will change. The ICO mania of 2017, I think, is dead and gone. I think we're seeing a lot more methodical creation of projects and things that are trying to play within the rules and do the right thing. But they're trying to play a game with the rules that aren't even certain yet. So, any other questions about self-employment income, employment taxes, basic transactions? So jumping into kind of my notes and thoughts on the state of crypto. Anyone that has any amount of money and has been in the space for more than 6 months is probably feeling a little bit of a sting. I think there was a lot of exuberance coming into the end of the year last year of this is going to go up. I think I saw, I didn't see as many when moon posts on the internet as people now are kind of longingly looking for those 10x returns. I think we're going to see a lot of projects that actually come to fruition that do that, but I think we'll see a lot of the wheat being separated from the chaff. Like I said before, the regulations on some of these projects that were being bad actors is making people nervous about investing in new projects. There was a significant amount, and maybe I'm just looking through my tax lenses, I think a lot of the push down from the spring of this year had a lot to do with taxes. I think a lot of people didn't realize that trading coin to coin would trigger taxable events. And people had these massive run-ups where all of a sudden they have a tax bill and their holdings are starting to wane off, and so they're panicking and they're selling right away to cover a tax debt. That's not exactly the most advisable strategy. I think anyone that wanted to be in the space long-term would have been better off looking at installment agreements with the IRS and looking at letting the federal government basically charge you an interest rate that would have been better to sit on and maybe even get to the point of long-term capital gains for some of these investments that you made at the end of the year, as opposed to panic selling and then triggering another short-term capital gain in 2018 as well. And then there are some concerns about market manipulation within BTC and BTC futures. That was one of the things that was announced, I believe it was in November, that there was going to be a futures market, and all of a sudden there was that huge run-up. And then it seemed like there's been some bad actors in that space of suppressing price and moving things around to directly take advantage of that. There will be some cases coming in the very, very near future, and that'll be very interesting to see what that does for the talks of an Ethereum future, a Litecoin future, and pulling more institutional money back into the space. And then my personal favorite, USDT Tether. Is everyone familiar with Tether? So that whole project, and I think it was just this past week, they had an attorney basically sign off and say, yep, there's this money in this bank account, after their CPA firm basically fired them as a client. I think it was either February or tail end of last year. There hasn't been a new CPA firm fired, and to get a letter from an attorney, and no offense to the attorneys in the room, doesn't necessarily prove that that money is still there the day after that letter's been signed. It just said that it was there at that time, and that was kind of a, hey, look at this, we've got this going on, we should be good to go. So that gives me a little bit of a pause. There's a couple other projects that I really like that are trying to become that stablecoin and replace USDT or USDT and have it be a little bit more open source. One of those that comes immediately to mind is MakerDAO, where you're pledging Ethereum into a smart contract, and the value of that DAI stablecoin is based on the price of Ethereum, and there's certain trigger points that will cover to sell. I have a lot more faith in that because you can see all of the contracts immediately. We don't have to rely on a third-party audit. And so when we start talking about the decentralized nature of cryptocurrency, the less points of failure that we have, like USDT, the faster things will grow. So now that we've got all the fun, sad stuff out of the way, how about some good news? So like I said, there's a lot of projects that are bearing a lot of fruit. There's a lot of use cases, I think, in cryptocurrency for information technology. I've seen a couple that deal specifically in the logistics space and getting rid of the issues of human error in inputs, because if you've got everything that's being verified by multiple parties for a lot cheaper than having human eyes on it, it makes a lot of sense in moving that through. A lot of the different decentralized exchanges are starting to launch. We've got a couple different platforms that are trying to move more through CDPs for loans and things along those lines that are going to completely revolutionize how we do financing, where they can act as a platform for people to borrow against, as of right now, their cryptocurrency, but potentially against real-world assets. There's a group here in Denver that's working on tokenizing commodities and different financial products that will definitely help bring more institutional money back into the space. And I think that was the main driver that we saw at the end of the year, was with the talk of a BTC future. Now all of a sudden there was a potential for a lot of money to be coming in from some of the old guard and the old finance. The regulation, or at least the talk of regulation from the SEC and CTFC, has been generally pro-crypto. They want to encourage the space, but once again, they're going after those bad actors. Until anything's really codified in law, there's not really anything that we can do except kind of hope and pray and keep pushing for good legislation. But Congress seems hesitant to write any sort of legislation relating to crypto. Anyone who watched the congressional hearing on cryptocurrency could tell that it was more time to grandstand on banks and traditional finance as opposed to actually talking about what this new technology is and how to go about regulating it. So I think we're still a little far off. I think we'll see more action on a state level, mostly because the states are kind of jockeying, especially after Wyoming passed their laws of, we want to be that crypto hotspot because there's a lot of money that will come follow. And I think there's a push for US companies to start looking at ICOs as opposed to taking those abroad instead. There's a lot of potential incentives and there's a lot of high dollar jobs that would come with that even if they were to give breaks on the regulatory side, they would pick back up in payroll. And then obviously as more projects come to fruition and the processing costs come down significantly, Ethereum's been looking at sharding. There's a bunch of different projects that are looking at speeding up the processing time and therefore dropping the cost, so it'll make it easier to move information back and forth. And then I threw another logo in there of the SEC just in case anyone was confused that that's not the football league, it's the actual Enforcement Bureau of Securities and Exchange Commission. So there have been, like I said, some positive comments coming out of the SEC. The problem is that it keeps being an employee giving a speech. It's not anything that's been written into a handbook. I think they still don't know how to fully interact with it, and they're just kind of taking a wait-and-see approach. But the fact that they are at least mentioning it is a very good sign because it's going to allow for a lot more people to take action and make sure that they're doing things well instead of kind of having to plan for everything. They can plan for a few things instead. And like I said, they are pursuing bad actors, which is good. Personally, I always get a little bit concerned when people say, well, we've got to think of the children essentially when it comes to cryptocurrency and people investing. There's a lot of information, and I've seen a couple different meetups here in the area that are doing things like reading through a white paper, making sure you're doing your own due diligence. I think we've seen a little bit of a return to people learning to do their own due diligence. I think they burnt their hands on a couple different projects, and we're starting to see kind of a pushback to personal responsibility in finance. And then I'm sure everyone's aware of also in the last few days the announcement of the A16Z investment firm. That shows a good push towards belief in this ecosystem. The nice thing about that firm is it's not necessarily we're going to go dump $300 million into one cryptocurrency. They actually have rules and guidelines of we want to be investing in specific types of projects directly in the companies. We want to be buying the tokens that are long-term plays, not necessarily short-term and playing volatility. So we're starting to see traditional money move back into the space and take an interest, especially as the SEC is backing off. And I think they'll do good things as far as the perception of the market and to also normalizing for regulation later on. And then anecdotally, I've seen quite a bit of interest in creating firms and doing it the right way. as far as starting an investment fund. I can't tell you the number of phone calls that I had of, hey, me and 4 buddies pulled a bunch of money together and we never created any entity and we're not putting together any kind of agreements, and now 2 of the 3 want to sue me. That's backed off. People are starting to get a lot smarter about how they're investing the money, so I think that'll bring a little bit more stability into the market as well. As investment funds are being created and people are capitalizing on this, it'll surge in fiat dollars into the market. And then my personal favorite, since we're here in Colorado, the fact that the Colorado Crypto Commission was announced, I believe it was yesterday or early this morning, that there was a blue sky law that they were trying to write mirroring what Wyoming was trying to do as far as giving a framework for companies to create ICOs here within Colorado that missed by 1 vote. They had 1 person they had the votes to pass, and the 11th hour that person said, I don't know enough about this, and they retracted their vote and voted nay instead of yay. The benefit to being that close is I think in the next session we'll be able to push that through, and that'll bring some stability to this market and give us a chance to compete with the Wyomings of the world. It'll give us a good foothold to really push companies forward and build that innovation. And the community around here seems to be very focused on working collaboratively, which is a very good sign as well, at least for the local ecosystem. But because of that, Governor Hickenlooper gave an executive order to create a commission to start exploring the ramifications of cryptocurrency and to start looking at it as an option as well for different governmental databases and things like that, and see, does it make sense to put our voter rolls on the blockchain? Would that secure them better than traditional methods? Should we start doing our property taxes and things like that on a blockchain? That kind of backing at this large of a governmental level is a very good sign for where the current administration is at, along with some things to kind of expect changes within the state Senate as far as now having the support and actually having information to make an informed decision on it. And there's a lot of different people that frequent a lot of the meetups that have been talking about this and talking about the good things that are coming from it. And I've met a handful of the people on the actual commission that are very sharp and very bright and very passionate about cryptocurrency. So it's not just some random person that has no idea what's going on. They actually want to see the growth of this project. Any questions on current state of the market or in general? All right. So I do have some bonus stuff since we've got some extra time that seem to be kind of reoccurring questions on the tax side of things. I'll come back to my contact information a little bit. Like I mentioned before, with the ICOs, when you start saying things that, we are a utility token because we don't meet the Howey test in its entirety, but then you refuse to actually collect sales tax, especially if you've got U.S. domiciled investors, or you're not treating it as if it was an actual usable item or a tangible item, you're going to run into some significant issues. And one really big part of that is the jurisdictional issues, especially now that sales tax through the Supreme Court was pushed, that you don't have to necessarily be in the jurisdiction or represent the person to charge them sales tax. There was a fairly large court case, like I said, within the Supreme Court. I think it was North Dakota was going after businesses that were selling within North Dakota that had no nexus. So if you think about an Amazon can technically not charge sales tax if they don't have any kind of physical presence within a state. However, with this new ruling within the Supreme Court, North Dakota can potentially go after Amazon for not collecting sales tax, which is going to then drive down prices and issues. The main reason why this is so pivotal within cryptocurrency is a lot of states have started taxing software as a service, as a tangible product, not as an intangible good. So if you're issuing tokens that are truly utility tokens and play into software and have a tangible use, you could potentially be liable for sales tax. And the one thing that states are very ornery about is their sales tax and their employment taxes, because those are supposed to be trust fund taxes that you as a business are going to be withholding, and they're going to come after the business, they're not going to come after the individual. Because every state has put on their tax returns, did you buy anything from out of the state? If so, what's the dollar value? And I'm pretty sure I've never seen anyone claim more than $0. Kind of like that, check a box and we'll donate $3 to the presidential election fund. I've never seen anyone check that either. And then also structuring how we give awards to employees, contractors. If we're going to structure it like a traditional restricted stock or a stock option, now all of a sudden we're pushing ourselves back into the border of being a security versus a utility token. So you have to make sure that if you're going to be doing an ICO, that you keep everything within a certain bounds so that you're not pushing yourself one way or the other. Or you want to be pushing yourself one way or the other. So there's not this nebulous in-between that would give either the SEC the opportunity to come after you or a state tax board to come after you for taxes due if you're trying to push yourself as an actual security token. Yeah.
I went to the blockchain meetup last week, where the Secretary of State spoke, the government meetup, and he painted in some ways a simpler picture for a slightly different scenario, which was there's talking about the laws for people to accept, candidates to accept crypto donations. And he said what they were looking to do was it has a US fiat value at the time it's accepted, that's how much it's worth. And that was based on candidates could receive artwork, they could receive other items, other assets that may go up and down. And so they just lock in the value at the time of receiving. But it sounds like that's not the case for normal humans who are like working and might receive crypto for work or something.
So you'd still recognize the value? If you receive $2,000 on the day that you get paid for services, you're going to recognize that $2,000. It locks in that price. The difference is we can subtract out business expenses against it. And then when you turn around and sell, you're not going to necessarily sell for $2,000. You could have it go up or down. Your basis is locked in at that $2,000. So there wouldn't be a gain above and beyond that. Does that kind of help clarify that a little bit?
Yeah, I wonder why the candidates wouldn't hit capital, like some type of capital gains issue when, let's say they got crypto donations, held on to it, and then sold it in 6 months, and it went up. They wouldn't have to pay on the gains.
So I would imagine that, did they explicitly say they wouldn't pay on the gains?
Well, I guess they're not paying taxes on donations.
Because the way that I would look at that is, you're only allowed to receive so much in donations from private individuals, that would be where that snapshot comes in, and that would be their basis of receipt would be, that, let's call it $2,000 for the day that they receive it. If it goes up, then the campaign would probably still have to record a capital gain and then pay the appropriate taxes on that. It depends on if they're structured as a nonprofit as well, and how that, there's 14 different things that can come into play. The one thing that I like to say when it comes to tax law is we've got this large overarching general idea, but the answer is always it depends, because there's 13 different factors that could come in and change the taxation or the basis or things along those lines. So, and that actually kind of tails nicely. A lot of things that we hear about as far as concerns is, well, if I give this cryptocurrency to my son, does he pay taxes on it? Does he not? How does it all work? Gifting rules. You are allowed to give up to $14,000 a year to an individual before having to report it against your lifetime gift limit or the estate tax limit, which I believe is now $11 million. So, and that's per individual. So you're allowed to give them that cryptocurrency, just like any sort of gift of property. If you give it before you die, you don't recognize the step-up basis. So one of the things that we look at too, and honestly in dealing with a lot of individuals, I have yet to find anyone that's kind of at that point of really being concerned about their estate, because most of the investors in the crypto space are relatively young. They don't have to worry about how do we transfer over keys, how do we know what the actual basis is, things along those lines. It's just not a consideration. More so it's, Dad gifted me $10,000 to go invest in crypto, and I want to gift him back actual Bitcoin. What does this mean tax-wise? How does that money get treated? And that's, if you've got that kind of issue, come talk to me personally, because it can completely depend on your specific situation. When you receive that gift of crypto, whatever the person gifting it to you, their basis was, you inherit that basis. So if I bought Bitcoin at $1 and now it's worth, I think, $6,300, if I gift that to, say, my brother, now all of a sudden he's going to have, if he were to sell it immediately at the time of gifting, all of the capital gains from that point, from $1 forward. That's not necessarily that he gets to just have it free and clear. So you have to be careful when you're gifting cryptocurrencies and how you're structuring that. Like I said, there's some considerations that we'll have to start looking at, I think, in the next 3 to 5 years as crypto becomes a more mainstream investment for some of the older folks in America. Yeah.
What if you lose money on crypto?
What does that plan?
So they'll take your basis no matter what. If you lose crypto, or are you talking like you as an individual dealing with loss limitation?
You bought high.
Yep.
And you sell low.
So like everyone that bought in after December.
Yeah.
So with that, anytime that you have a loss within cryptocurrency, it's a capital loss. When you sell something for a short-term loss, it retains its character. So short-term losses tend to go against short-term gains first, and then long-term, and then it comes over to the other capital gains. As long as you don't have losses in excess of your capital gains for that year, you can take 100% of your loss. But the second that you start having more loss than you have gains, they cap you at $3,000, and that goes against your ordinary income on your tax return, and the rest rolls forward. And so as long as you keep going along, you'll keep pulling $3,000 against it. And if you happen to have a windfall, let's say you harvest a bunch of altcoins this year that lost out huge, and you've just said, I'm not buying, I'm not trading, I'm just going to park it and forget about it for 5 years. That loss would keep rolling over every year for the next 5 years. And then if you were to turn around and sell, that carryover loss would offset your capital gain in the year that you sell and have a gain. So, yeah.
Said utility tokens. If I were to create a utility token and never sell it, but you can only achieve it by using an app, would the value be zero and not be taxed?
Potentially. We'd have to kind of figure out whether or not there's a market value from performing the activity that you are then potentially receiving economic benefit from. That's one of those depends questions, because depending on how that rolls out, and we've dealt with this with a couple different clients of, well, if we say it's $0 today, but it goes on the market 2 hours later, does the fair market value determine what it is by close of day? When do we actually have that valuation? So if you want to come see me afterwards, I'd be happy to talk with you a little bit more about the specifics of it, because it sounds like you've probably either got a use case in mind or you're dealing with that yourself. So, yeah.
If the gifted party receives or inherits the basis, do they also inherit the date? So like it's already in long term for the other person, it's still in long term.
Yep.
As far as the gifter, then that comes off as like a zero cost basis sell, then, or how's that? Or is that just off the books?
It's off the books. You wouldn't treat it as a sell, because then you would potentially trigger a loss.
That's worth pointing out that the burden of proof is on the taxpayer to prove basis, and so if you're the recipient and you can't prove basis, basis is zero.
Yep. Yeah, it pays to have records, and it pays to be talking to the people that you're receiving gifts from. The best thing you can do is have them signing off on the date acquired, the purchase price, and then have it, either signed and make sure that you've got a date on it, so that should you need it, you've got it. We've had a couple clients that we've actually had some gifting from a friend that we made sure that they wrote a letter and it's saved on multiple locations, just in case something happens that we do need that letter. But yeah, you want to make sure that you've got your proof. All right, and that's all I've got for the presentation. If you guys, like I said, I'm happy to answer any and all questions that we've got. If you don't want to ask me tonight, we've got all this information here. I'll actually be at DisCon in Boulder as well. We're planning on leading a panel discussion then. So, thanks. I think it's just open networking for the time being.
Thanks for going through all that. I had no idea it was that complicated.
Maybe have one with the booze, maybe something.
Yeah, hang out for a while. All right, thanks, guys. Let's talk amongst ourselves.